Hello and welcome to BTVI. I am Muralidhar Swaminath and today's market guru, Chakri Lokapriya, is an expert, TCG Advisory Services. Chakri, welcome to the show.
Thank you for having me.
My first question, we are at the crossroads. On the one side I'm saying that I should be an optimist from a long-term point of view. On the other side I'm saying that I should be a pessimist because the stocks would fall further. What should one do? Just stand at the crossroads and watch? Or say, okay, I'll take this direction or I'll take the other direction?
Yeah, good question. We've been looking at various sectors, and various sectors have actually the valuation of many companies are close to the 2008 lows. But the companies themselves are in a far better position than they were in 2008. So that gives us some comfort that, because the companies have repaired themselves, the balance sheets are stronger over the last 10 years. So the market can sustain the current multiples. So from that perspective, there is kind of a limited downside from the current levels. But I guess the biggest question which is facing the market today is earnings growth. And that earnings growth, we think, for FY20 and 21 is likely to be revised down further and might end up to be in the low single digits, at least for FY20. So against that backdrop, you have a number of companies and sectors within that, which are, while the valuations are looking okay, the growth is the question.
Right. If growth is the question and you're looking at earnings projections in single digit, then the returns could also be in single digit this year, if we are lucky.
Indeed, but markets being forward looking, if we see some kind of immediate stimulus measures, see the FDI announcements and various announcements that are being made are positive for the longer term. I guess what the market is, and corporates have, which various industry bodies like CII have all announced, is they want some kind of stimulus measures, whether it's the realty sector or the auto sector. Yes, some measures have been, the government has been receptive, it has been announcing in the last week or so. But I guess there is a need to do a little bit more.
Little bit more, or maybe even a lot more, because you need to really push aggregate demand up. Aggregate demand is stuck, starting from the automobile industry to whatever you look at, even financial services for that matter. If we need to do that, even if they do that, it will take time for it to translate and percolate down. For example, the surplus transfer from RBI. We are looking at something like 58 to 60,000 crore additional money flowing into the government, which means interest rates are supposed to go down if I go purely by textbook, but they don't seem to be happening. So the pessimist would say that, look, there are too many problems, you guys be very careful. So what will you advise your clients at this stage?
With the RBI surplus, for instance, if the expenditure goes into sustainable sources, as various indications, it would actually expand the GDP by about what goes into the GDP by about 2.5%. The government expenditure would go up by 2.5%. Now it has a multiplier effect.
Correct.
So on one hand, if the government stays away from the subsidies and rather announces more job creation, sustainable ones, that multiplier effect would have will sustain the market, and not only it will do that, it will bring back confidence into the various sectors such as autos, which are all down and out, because those sectors valuations by per se are trading at valuations.
Very attractive valuations, you would say.
Indeed.
So if let me focus since you're talking about auto sector, there are 2 or 3 different views. One was this concern everybody kept blaming about BS6 and BS4 and the registration fee, all those things have been addressed. But still there doesn't seem to be that kind of revival in auto sector, especially passenger vehicles. I'll come to CV later. If I purely look at the car industry, how would you view that? And therefore, should someone go and keep saying that, okay, let me accumulate Maruti? All said and done, Maruti is still the largest player, but then there was one report yesterday which said that Maruti could go down to 5,100.
The car industry, or rather basically the entire auto industry, is facing a downturn. We all know that. And the volumes, when they announce them this month for the month of August, they will show a further decline, strong declines, year-over-year declines of 25% plus in volumes. So against that backdrop, the question is, there has been a lot of confusion about BS4, BS6, electric vehicles and all that, which has taken the sales out of both the consumer and the auto companies, and there has been an inventory mismatch, as a result inventory buildup. And so now the question is, what can you do? Autos anywhere in the world, and India too, is a cyclical industry. So from that perspective, it gives us comfort that because it is cyclical, growth needs to come back. Then what is the measure? Maybe it's a temporary GST cut, maybe it is a scrappage policy which will help. But I think this festive season sales are likely to be lower than the market expects a revival, which we think it may not be as strong as it will be. So having said that, now Maruti or M&M, any of these companies are trading at close to their trough valuations. So will the growth settle at a higher number from current level? The answer is clearly yes. So from that perspective, yes, I think there is not much downside, and one can start accumulating these stocks.
What should be the accumulation strategy in this case? Don't have to be stock specific. As an illustration, suppose somebody picks up Maruti or even M&M for that matter. They've all I will not go to the 52-week high because that was very high, you can't compare them. If I take the recent peak for Maruti, it would have been around 7,300, 7,400. It has given up substantially. Now, if somebody wants to accumulate and let's say they want to put in 1 lakh rupees for example, how should they do it? Keep buying 5% every time it falls, or should they buy when it shows some signs of stability?
There have been various market studies rather on the various market levels. So the absolute level, I think, for the market, it kinds of bottoms out somewhere around the 10,500-ish, 10,700 mark levels. So if you go by that as a standard, there's probably some more 5-10% for individual stocks downside at current levels. Now, will we give the peak multiple that Maruti had, let's say a couple of years ago? It's unlikely given what's happening in the industry. So let's say that even if you assume a 20 times multiple, and then on a lower earnings base because earnings have been cut. So I would assume that if you spread it out between now and a 10% downside, it leaves room for a decent upside for a longer term investment.
And keep on averaging as it goes. I see my approach is from an investor who says that, look, I want to have Maruti in my portfolio for a longer term. Not just Maruti, there are many other examples, it's easier to talk about Maruti because it's the biggest company in India as far as autos go. So that's why I keep taking that example. Somebody who's got a 5-year vision, let's assume that the pain will last for at least 1 year. So you will have to accumulate over a period of 1 year?
Markets being forward looking, because at some point once it gets the confidence back, the stocks will start moving up again. So from that perspective, now whether it's electric vehicles, it's not a threat for any one particular company, but all auto companies around the world. And all auto companies around the world are at the forefront of moving to the newer technologies as and when they become available. So from that perspective, that wouldn't be a reason to not to buy an auto company, because the leaders will themselves anyway invest.
They will adopt.
They will adopt and adapt to the changing circumstances. So against that backdrop, longer term growth is not an issue, whether it's a petrol vehicle, diesel, or a car, or a hybrid, or an electric vehicle. The question is, when will volumes come back? And if India is still a growth story, car ownership, vehicle ownership, whether it's CVs or 2-wheelers or 3-wheelers, 4-wheelers, all have significant room. So, and Maruti, for instance, M&M, these are all market leaders. So you wouldn't go wrong in accumulating them between now and a few % down from here.
Right. Commercial vehicles. I'll leave out Tata Motors because that's a different ball game altogether. If you're looking at something like the only pure play commercial vehicle is Ashok Leyland. Ashok Leyland has been struggling around the 60 level. It went down to 56. It went up to 80. So it is purely linked to the revival of growth. Is this again a contrarian buy? You accumulate over a period of time. How will you view?
If you look at Ashok Leyland and companies like that, in fact, they have been, Ashok Leyland is probably trading at its 52-week low, close to.
Yes.
And so against that backdrop, all the fall in CV vehicle sales, etc., will come down, kind of reflected in the price. Now, going forward, policy announcements by the government and policy initiatives, in the end of the day, infra is a big area for the government, buildings, all kinds of the activities, whether it's hospital announcements a few days ago. All these things require transport. Transport requires CVs, LCVs, etc. And therefore, Ashok Leyland and other auto companies which make trucks of all kinds are beneficiaries. So, from that perspective there, in fact, I think the revival will be faster as and when the government starts respending, because pre-election, post-election, there's been a lull. So, once that lull goes away, I think we'll begin to see an uptick in volumes.
Right. In fact, I was speaking to the Tamil Nadu minister, Mr. Pandyarajan. He was saying there is no threat of immediate job loss, but then he hinted at it, saying that we need to go for reskilling, especially in the automobile industry. In and around Chennai is a very important automobile center in this country. It generates lots of employment, be it Ford, you name it, everybody is there. So the reskilling part is, when he is saying that, he knows that there is going to be a job loss over a period of time. Now, how will that affect the industry? So it also means that the businesses of these people will, unless they change, whether it's Ashok Leyland or Eicher or anybody for that matter, EVs could change the game. Now, which are the companies in your view who are really good enough and strong enough to make this transition?
That's a very important question, because and this reskilling will hit probably the two-wheelers first and the commercial vehicles the last, and because that's more or less the transition of the EV vehicles. First two-wheelers will become EVs, and then the last commercial vehicles will become EVs. And as the transition happens, all these automobile hubs like Chennai and various hubs that you have in this country, auto ancillary companies also are very important. And a vehicle today has 30,000 parts. Once it's a pure EV, it'll need only 30 parts. So, the number of job losses is immense, as we know that. So, this reskilling is something, I think there is sufficient time, but there is clearly a cognizance, which is a good thing. Right. But I wouldn't be too worried about it in the immediate term.
So, therefore, the two battery players listed there, now they will have to change their game, I suppose. Because they are the ones, as you rightly said, would be threatened. So, if somebody is going to look at Everready or Amara Raja today, how should they view that? Should somebody go out and say that, okay, these two guys have the capability, should I buy them, or somebody will come and disrupt them completely and therefore I should not touch them?
Exide, Amara Raja, these companies are market leaders with no real competition. Of course, there are a few private players who are emerging. And clearly, electric vehicles, the density of a battery in an electric vehicle has to be far higher. And so the technical capability, all these companies are working on, and of course the whole support infrastructure around that. So from that perspective, these companies are talking from our due diligence to various technical partners around the world. So, but that is unlikely to translate into earnings in any time in the near future. In the foreseeable future, for the next 3 years, it's only a pickup again in auto volumes, which is going to move the needle.
Right. So, let me shift focus to another important barometer, indicator, or whatever we call it, the financial services industry, the banking industry. Today we are in a situation where even the best of the banks, people are not rushing into. HDFC Bank, for instance, there are still some doubts. Nobody is rushing into, let's say, even Kotak Bank, so that let me wait and watch, because the economy is slowing down. There could be NPAs, fresh NPAs could come. See, last year we were all doing chest thumping, shouting from rooftops, saying that NPA has been resolved, I have got so much money back, it's turnaround. But suddenly we find that fresh NPAs could hit the industry. So how does one approach banking?
I think within banking, the reason why the Kotaks and the HDFCs of the world are kind of slowing down, the stocks are not moving up, is because their valuations in comparison to the other, for instance, HDFC Bank trades at 3.6 times book, Kotak's probably 4 times, and SBI, an equally big bank, trades at 1 times book. So the disparity has grown very large, and that's the reason you're seeing a pause, because the market was led by only these 15-20 companies, and Kotak and HDFC being one of them, which took the overall Nifty up.
Correct.
So from that perspective, I wouldn't be worried about the derating, because these are still banks with very low NPAs.
Right.
On the other hand, you have the smaller NBFCs, the smaller banks, where while the NPAs have kind of marginally improved in the last quarters. That's where the chest thumping came about. But the good thing is they've also improved their provisioning. So they have kind of prepared themselves for a worsening. In case if it worsens, right, then there is a certain amount of cushion. Valuations 0.4 times book and the 0.5 times book for the PSU companies.
Yeah.
NBFCs of course have corrected significantly in price. So from that perspective, I think banking is more close to the bottom. As there is this concerns about new NPAs in sectors like real estate, but I think at least there is a cognizance by the government that they want to install, put measures and policy measures to ease the pain.
Absolutely. Now, in fact, off the lot, SBI has turned out to be the most aggressive in terms of capturing market share. They've been very aggressive in reducing the rates, offering discounts, whether it's car consumers or home loan consumers, and the stock must have lost about 18 to 25% from its peak. Do you think from that perspective SBI is cheap because it's the largest bank, it just moves the economy, it just moves the market. So is it good to accumulate SBI?
Yes, I think the trough valuation for SBI is probably around the current range, is about 0.8 times to 1 times book. The stock is trading at about close to that levels, around 1 time book. So give or take another few percent, single digit 5 or 6%, the stock is pretty much trading at a trough valuation, which is a far healthier bank, SBI itself, than it was a few years ago. And so from that perspective, yes, it's clearly worth accumulating at current levels.
Absolutely. So let me also, within the financial services sector, I don't understand this business, but I personally, find it easier to understand that things that you see and use in your day-to-day life. Insurance, for example, I know that the insurance industry is growing, the markets are giving a discounting, but are the markets blindly getting into it? How should one look at insurance business?
Insurance, as you rightly pointed out, is a growth area, underpenetrated, long growth curve ahead. Valuations kind of reflect that, but valuations are still not out of hand. So as long as the policy underwriting is disciplined, which is always a risk in these kind of companies, and whose effect we'll know only a few years down the road, I think from insurance at the current levels still is a very healthy sector.
Right. The other sector which always is part of anybody's portfolio and should be part of the portfolio is again something that we consume and we see every day, consumption sector. The HULs, the Britannias. I leave out ITC because I don't want to look at cigarettes and smoking, not a healthy thing to do. How would you view Britannia and Nestle? Nestle has got into the top Nifty. Britannia also got into Nifty. They had that pride of place. How would you view them? Do you think that they are excellent long-term bets that you should have them in your portfolio?
These companies are also very expensive companies in terms of they will do because their ROEs are high, it can sustain that level of valuation, and they will compound at a decent rate, which would, I think, be a far lower compounding growth rate than what a cyclical can do with a far higher risk. So from that perspective, well, lately you've been seeing that there is a pricing pressure, including Hindustan Lever is facing. They've cut down prices of some of their products. So from that perspective, I would still stay away from these companies because yes, they are very safe companies, excellently run companies, but valuations are rich.
Okay. So if I ask you to construct a portfolio, and which will be your top sector and how much percentage will you give?
I think it will clearly be banking. When I say banking and financial services, which is banking and NBFCs, it is the largest sector in all the indices, and we would be far higher than the indices. Because
so which means that it will be 50%.
50 probably would do okay, but 35 let's
30,
say.
So market is giving 35 is the market.
So let's say it would be about 40-ish. And because in a cyclical uptick, usually they are the first sectors which turn around.
Correct.
And also the government's focus, policy initiatives in terms of providing additional capital, easing some of the pressure on sectors that they lend to, the banks and the financials, NBFCs would be the first to benefit. So from that perspective, yes, it is financial services.
Okay. So 40% in financial services, we still have 60 rupees to go. Where will you put and how will you put the 60 rupees?
I think the cyclical focus is important, is at least we are having a cyclical focus right now because we believe the economy is kind of bottomed out. And you will see an uptake probably next year. So from consumer has been very weak. Consumer stocks have also been weak. Small ticket items like a Voltus, it's a smaller ticket than buying an auto. So companies like that we would accumulate. So that as a sector, I think in the Nifty it has a smaller weight, but if you look at the broader indices, it has a bigger weight. So maybe about 10-15% of
for
your
auto.
portfolio. Not auto,
for
the
consumer.
for
so
consumer.
including auto in the consumption
in the consumption
basket. And the balance keep in cash.
Oh, well, IT will continue to do well.
Right. Yeah.
Pharma will do well.
Right.
And that's roughly, let's say, about 15-20%.
Right.
And the balance would be, more opportunistic because you need to, as sectors come in and out, you could cycle in and out of the
So
sectors.
how much cash should one keep? 5%, 10%?
I think it's prudent in the current market conditions to be around that 10%
Around
mark.
10% is better.
Is better.
Okay. One last question. In all this, this portfolio, the way we have discussed so far, it looks very logical and rational. But what is it that could come and disrupt me? Is it Boris, the Prime Minister who suspended Parliament and pound going out of whack, or will it be some commentary from Trump? Oil is in my favor. What are the risks that you see coming from globe which could disrupt this?
I think there are two parts. One, from the domestic perspective, I think clearly if all the various industry bodies stay away from getting into pricing controls, whether it is the TRAI putting on media industry or on the telecom industry, or if it is regulators clamping down on the net interest margins fees that a bank can charge, I think that is the biggest risk because the focus should be on demand revival and not on pricing curbs.
Right. Okay. So not to worry too much about the global developments. We have plenty of scope for growth here, and the risks aren't too many from what Chakri has been saying. Very interesting portfolio construct that Chakri has given us, and save, invest and prosper. Stay tuned to BTK. Thank you, Chakri, so much for watching.